We're now going to start moving on to our crypto panel. We always get a lot of feedback saying that everybody loves crypto panel. We're doing it a little later in the day today, but I think the topic's great. It's called Bitcoin is back over 18,000. Is this rally different than 2017? Going to introduce our panelists. We've got George Michalopoulos, who is the portfolio manager of our Leonidas Crypto Fund. He's going to be the discussion leader and really guide us through both that overarching topic and get into DeFi, which is the hottest new trend in crypto. We've got John O'Brien Jr. You may have heard that last name. His family's done one or two things in futures over the years. He's now heavily interested in the crypto future space specifically. Christine Sandler from Fidelity Digital Assets. Many of you raved about her at our last event back in September. Leads up Fidelity's prime brokerage efforts there. And Matt Fox, who's another kind of crypto wonder kid over at Titan, the big fund of funds in Connecticut. And I gotta say, I'm impressed. You know, this being the crypto panel, people are tech oriented. I see two other people got the virtual background to work. George and John, I gotta lump you guys in the boomer camp for not getting the virtual background to work. But Christine and Matt, well played. So I'm gonna ask George to unmute if the boomer could figure it out, and then get this panel underway. Thank you, everybody.
I'm just a trader, James, and a crypto trader at that. You can't expect me to be able to handle these advanced moves, technical moves. But so what do you want me to launch into, James? Anything specific or just an overview of the market?
I think start, with the first talking point, which is that Bitcoin is back over 18K. How is this different than 2017? 2017 had that kind of bubble, like mania about it. Here we've hit all-time highs kind of effortlessly. I mean, I think, you've got a lot of both fiscal and monetary stimulus, driving that along with greater institutional acceptance. But, take it from there.
Yeah, I think you kind of hinted at the main difference. Certainly the story is that this is much more institutional in its makeup, that we're seeing broader acceptance by quote unquote serious people this time. And I think there's merit to that narrative, although it's probably overstated just because it's become fashionable, not because it's not true. And there's certainly a very real retail component to it. Even now, and part of that's just obvious, and part of it's in data that I would argue people like Pantera have been a little bit contradictory about. In other words, they present the case for institutional demand, which I agree with, but then some of the evidence they use to buttress the fundamental sort of supply shock from the halvening is that PayPal and Square have in excess demand on a daily basis for Bitcoin than its supply algorithm dictates. In other words, just those two sources exceed the oncoming marginal Bitcoin supply. And that's an argument for why price will continue to go up. However, in my mind, that's more indicative because of the nature of those platforms of retail demand. So I do think you're seeing a combination, certainly, of retail and serious people, in quotes, institutional demand. And I think that does make it somewhat different, but that difference has been somewhat probably overstated in the near term. That said, pretty constructive, the space, and I don't know if you want me to launch into, because it's starting to feel like a monologue, but how I think another differentiating factor that's exciting that we'll be talking about is the smart contract DeFi space and how that's evolved since 2017. And that's another reason I think that this rally has legs in the space broader, not just Bitcoin, but the crypto space in general. So I'll stop there, but I'm happy to deep dive on that side of things a little bit later. If I'll turn it over to anybody else who has something to say about this.
Christine, why don't you take it? Unmute first.
Yeah, sure. I'm happy to contribute. George, I think there are a couple of themes that you raised. Clearly, the global macro backdrop has been supportive to institutions either entering the space or continuing continuing to enter the space. We've actually seen that at Fidelity Digital Assets kind of across the board. So irrespective of almost investor class on the institutional side, everything from pensions and endowments, down to family offices. And we've also seen that kind of acceleration with the price movement. We've seen kind of that almost like a FOMO type of, am I missing it? Am I missing something? So clearly that global macro narrative set the stage, but we are seeing kind of a continuation of that throughout in particularly the fourth quarter. So very much an acceleration. I will say this, your comments on DeFi are less, we don't hear the same type of interest in DeFi projects from the more traditional new entrants. They're very much interested in Bitcoin. The second thing they ask about is Ethereum, but they're not quite making the leap to DeFi. That being said, the DeFi projects have been legitimate proof of concepts that are happening in front of our eyes that, really require us to kind of wake up and take notice as well.
Yeah, I guess I can kind of echo Christine's comments there. Anecdotally, I'm getting people reaching out to us, trying to get exposure to Bitcoin. I believe it is the gateway drug into the broader blockchain ecosystem. As everyone on this panel knows, blockchain is very much a rabbit hole. So once you get down, it's going to touch every industry. So you kind of have to focus on what your skill set is for. But it's what institutional investors are seeing on CNBC. They see the Bitcoin Coinmetrics index. It's better suited for the current macro backdrop that we're seeing right now with record fiscal stimulus, record monetary stimulus. Looks like we're going to get more fiscal stimulus by the end of the year, and probably more after the Biden administration takes over. But it's Bitcoin being a hard capped, hard type of money fits that narrative of what's going on in the macro backdrop. And I think Bitcoin, when you're first starting to get into the blockchain space, it's just a lot easier to understand than Ethereum. So that's where people start first. Like for example, my 9-year-old son, he's a proud owner of Bitcoin. I've been talking about it so much at home that he wanted to buy it himself. He had like $600 sitting in his desk. So he gave me the US dollar. I opened up a digital wallet for him on his phone, and I sent him the Bitcoin. So I just wanted to echo Christine's comments there.
Great, and I think I think there are a couple incremental differences between now and 2017. I think if you look at the 2017 rally, the absolute top of that rally in mid-December was the day that either the CME or the CBOE, whichever one was first, launched, and that was the absolute top of the rally. So that market, it was large. It was it's still largely a retail movement now, but there wasn't any. It was almost entirely a spot market at that point. Now the CME futures have over $1 billion of open interest, and the top 10 futures exchanges across the world have over, I think somewhere over $7 billion of open interest. So I think that while I agree to George's point that the institutional interest, I think you're seeing the early adopters in the institutional investment space and the more forward-thinking allocators are focusing on it. So I think you're still early there. I think the crucial difference is that in 2017, it was impossible for them to get exposure, and now they largely can get exposure. It might look a little bit different. I think a lot of them are not so interested in making single asset allocations writ large. So you have certain kind of procedural limitations, but I think now that the infrastructure is there. I think to George's point also, I think you're seeing a larger swath of institutional investors, with Paul Tudor Jones, Stanley Druckenmiller, even Ray Dalio recently said that he's, slightly changing his tune on Bitcoin. I think that's kind of providing larger acceptance and specifically focusing the thesis on digital gold. I think when you look at crypto in general, and also Bitcoin specifically, trying to understand how to value it, you kind of need to I kind of view it as a rough sum of the parts analysis where you take all the different opportunity sets and kind of discount them. I think what you've seen from 2017 to now is a significant lowering of the discount rate on the digital gold thesis. I think that seems like that is much more, it is much closer to being brought to fruition. I think that alone gets Bitcoin to somewhere and potentially in the hundreds of thousands, mid hundreds of thousands per Bitcoin. So I think that is kind of the next step. And then I think just one last point on comparing this time to 2017, I would say that 2020 is more reminiscent of 2016 than 2017, which is why I think a lot of people in the Bitcoin and in the crypto space are so excited right now, because I think, it might seem like we're at all-time highs. It's kind of similar to that frothy period in 2017, but I think it's much more similar to the period in 2016 where, when Bitcoin broke $1,000 in 2013, it had a down year in 2014, it had a moderately up year in 2015, and then in 2016, it had a new annual closing high. I think that's what we're having now. And I think 2021 could look much more like 2017.
Matt, I think one of the things that you also bring up is, you're right, the futures market was like non-existent in 2017, and now the futures market is fairly robust. The other thing is also, I think traditional institutions had a very difficult time putting on a sizable position, a position of any meaningful size. Back in 2017, we've proved, that's been proven with, MicroStrategy's experiment as well, that you can build a pretty significant position over a period of a short time without really moving the market. So I do think that there's depth and clearly there are more opportunities to avail yourself exposure to the asset class, even if it is through the proxy of GBTC. So we are seeing lots of different ways of expressing an interest in the single asset of Bitcoin, which is definitely the entree vehicle that we see. And one of the points I want to make is it is still vastly underowned by the traditional side. There's a ton of runway. Once I think I've had the last Bitcoin 101 conversation with a traditional hedge fund, I have 4 more the following week. So there's still a lot of latent interest.
Yeah, I think that's a good point. There's just a lot of bigger financial on-ramps now for big financial institutions, and the easiest ones to go to, and it seems like a lot of the rich boomers, I know James called me a boomer when this call started, but a lot of the rich boomers Paul Tudor Jones, I'm not sure exactly how Stan Druckenmiller's getting exposure with, but Paul Tudor Jones is buying futures with the BVI fund and passively rolling it. Guggenheim talking about putting 500 million into Grayscale. There's a big premium there, but there's just an ease to it. So if you think Bitcoin's going to go up rapidly right now, they're okay paying that cost, because going down the road of opening up a digital wallet or maybe opening up an account with an OTC desk is just one more step that they're comfortable doing. The whole security on custody side, they're probably not comfortable with, but with the futures contract, it's essentially cleared the CME. So it's just an easier on-ramp. And it's something that, even though it was the dead high in 2017, there was no liquidity. And so these on-ramps that we have now just didn't exist back in 2017. I think we're seeing a lot of, we monitor the flows off the various exchanges, whether that be, spot exchanges offshore or derivative exchanges offshore or spot and derivative exchanges here. And it looks like a lot of the flow and the buying power is coming on the regulated U.S. exchanges like Coinbase and Kraken. So whether that's, people are coming to OTC desks, they're laying it off on these exchanges, but you just have a much healthier, people, institutions with bigger wallets that are buying at these levels on these exchanges. So that's another difference from the 2017 scammy ICO bubble that we experienced.
Yeah, and related to touch on all these points, just related to exactly this demand, I think it may be obvious, but I think it's worth stating anyway, are the network effects behind these buyers and the acceptance that it's gaining from am I sticking my neck out too far type of perspective to justify the type of action that's required for an institutional type of investor to actually buy it and not look like an idiot, later, or feel like they're doing something that isn't fiduciary responsible, or is kind of potentially problematic for them reputationally down the road. And so now that you've got some of these big names behind it, I think it provides the cover necessary to continue that snowball. And of course, price is the ultimate settler of these types of debates. So it doesn't hurt that we're at these all-time highs, and they feed off of one another. But I think that's an important point to make.
The
George,
joys of working from home.
Exactly. I'm glad my dog isn't, he's sleeping. One of the things, so we survey institutional investors annually, and we run this survey, it's digitally focused. And we run this survey every year. We've done it for the last 2 years. We intend to do it again this year. And the same consistent obstacles came up, which were regulatory uncertainty and career risk and lack of traditional institutions in this space. Those obstacles are kind of beginning to be reduced with the prominent names, the forward-looking statements by real regulators like the OCC and the CFTC. Even in their action against BitMEX, they made very constructive statements on the future of digital assets, which some view as, look, we're obviously creating a much more regulatory compliant and acceptable venue for institutions to interact with. So those are the types of things that are really also feeding into this global macro backdrop, reduction of those obstacles, and that elimination of career risk. What I expect is that we'll see even more robust numbers out of the survey that will run shortly, and we look forward to kind of sharing that with you in the coming months as well.
One thing I think that's worth touching on that we slightly touched on already is, what is, aside from speculation, which we've known for quite some time, this is a great asset class for speculation, but how has the question of what is this stuff actually being used for aside from speculation, how has the answer to that question progressed? Not necessarily from 2017, from 2017 is fine, but what's the arc of that part of the story? I don't know if anybody in particular wants to go after it, after that question, or I'm happy to go answer my own question if nobody does. But
I think that Michael Saylor, backing up a little bit, the real dark horse in this, institutional buying spree that we've seen in Bitcoin has been the corporate treasurers and CEOs putting their balance sheets into Bitcoin. I don't recall many people talking about potential buyers, but that was certainly the case when Michael Saylor started buying Bitcoin with MicroStrategy's balance sheet. So I think that kind of flipped the narrative too, where all of a sudden it looks like it takes the career risk. Christine was talking about career risk from Paul Tudor Jones buying it back in May, but it also took the career risk from CEOs that want to diversify their savings and their balance sheet away from cash into something that's is not being destroyed by the government. So I think that shifted the narrative too when Saylor came out and started buying it and then doing all the rounds on the podcast.
Yeah, definitely. Do you have any feelings on sort of, aside from, to me, that's still a form of speculation of sorts, certainly at a corporate level, and very worth noting. I'm glad you pointed that out because a lot of people, I don't think, know that story. And you're absolutely right. But from a perspective of using these tools as tools, aside from just enriching ourselves through asset appreciation, is there a compelling narrative yet in the space? And in my mind, the digital gold, I don't know if it was Matt, was it you that mentioned digital gold has certainly made some progress. I would agree with that 100%, that to me is the most intellectually compelling and the most broadly accepted alternative use case aside from speculation, although perhaps we're sweeping we're sweeping it under the rug in the sense that gold itself is arguably largely a speculative instrument itself for most people who aren't building it into their industrial chips or whatever. But what
Yeah,
about aside from that? Is there anything else we can point to?
I think, yeah, I think you're actually right on that now that I'm thinking about what I just said. Maybe MicroStrategy wasn't the best example because he put all of his cash into it and now he's taken out a convertible bond to buy even more. You know, maybe Jack Dorsey at Square probably would have been a better example to use because he put 50 million in his cash in instead of, you know, his entire treasury.
Yep. You know, I think one small point, I think I would somewhat separate speculation and saving. I think that there is certainly an area of speculation where it is, you know, Bitcoin is purely used as a speculative vehicle. I think the funny element about MicroStrategy is at first it was, you know, Michael Saylor is putting it on his company's balance sheet as a treasury reserve asset, right? As a savings technology to preserve the balance sheet power of his company. And then, you know, takes out a loan to go buy more Bitcoin. So I think, you know, there's a fine line, but I think it is largely a savings and a speculative technology now. I think that, you know, while it's more nuanced, I think that you can see the next wave. I think, you know, what are you using it for? I think it can broadly be categorized as spending. You know, when are people going to start spending this stuff or transacting with it? You know, and I think that from a technical perspective, you've seen advancements specifically from the Lightning Network that has a handful of limitations, some self-imposed, some still that they're still working out from, you know, funding channel capacity. But I think, you know, I think there is currently, and for the while the speculative or the savings narrative is so strong, there is a severe disincentive to spend Bitcoin, right? It is almost a deflationary asset. You don't want to spend it. Anybody who's spent any time around the Bitcoin community knows someone who, you know, rused the day that he or she spent 20 Bitcoin 5 years ago to go buy something, and it would have been worth, you know, whatever that, you know, $500,000 right now. So I think that, you know, my view is that the savings technology is coming. I think what's encouraging, the spending technology is coming. I think what's encouraging with Bitcoin is that you're seeing a very strong effort to build in that payments or spending functionality without sacrificing the Bitcoin security model, which is, I think, extremely important. I think that it's coming. I think it'll be a situation where necessity will be the mother of innovation. I think when there is a need to spend or when that strong disincentive to hoard goes away, which to me will be when the price is much higher, right? When there's lower volatility, this digital gold thesis is, you know, much more closer to kind of completion. That's when I think, you know, you'll start to see more spending. But I think, you know, and I think actually I would say one other use is you're seeing it used as collateral in DeFi, right? So I think you still are using it as, you're seeing it used within the cryptocurrency ecosystem. I think there's something like over 150,000 Bitcoin are locked in DeFi contracts right now. So I think you are seeing it, you know, in the same way that in 2017, everyone was trading cryptocurrencies using Bitcoin as kind of their reserve asset. I think now you're seeing something similar with DeFi, where, you know, again, 150,000 plus Bitcoin being locked in as collateral for lending and other kind of, you know, decentralized financial products. So I think you're seeing it in that end. I think the spending will come specifically when you don't have this strong incentive to hoard as much as you can.
Yeah, I would, you beat me to it, Matt, because I was going to just say that the emerging collateral narrative is actually happening. In fact, today we announced a partnership with BlockFi to hold assets in custody for bilateral loans facilitated by BlockFi. So yeah, that collateral narrative is beginning to grow. But I would also say one of the obstacles that's preventing Bitcoin from being used as a method of payment is this tax ambiguity. So once we get a little more clarity on the tax side and and when that Bitcoin is actually transferred, does it represent a taxable event? That's a critical piece, and I think that's holding it back. But clearly the entrance of PayPal with 330 million user accounts represents a network effect from a payment perspective, not just from an investment perspective. That's non-trivial. So very much looking forward to seeing how the payments case begins to emerge as well.
Yeah, let me be a little more harsh than I think you guys have been and take a stronger position. I am of the belief that I'm very optimistic from an asset price perspective on the space. And I think a ton of interesting things and people are involved. And I think the future is bright. But that being said, I would more harshly say that there is no other real use case that's been demonstrated of note. I think these other things that we're listing are fancy ways of, a derivative of a speculative instrument is still a speculative instrument, including using a speculative asset to make more speculations elsewhere by collateralizing it. So I think the onus is very much on the space still to prove that it's not just narrative heavy, high volatility, get rich quick scheme. I believe that it does have all of those components, and I am fundamentally of the belief that it will evolve into something much more powerful than just that, but we just haven't gotten there yet. And I think the thing that it's suited most for, at least for Bitcoin, but so far the space in totality, is as the ultimate answer to severe inflation through its deflationary nature. It is designed as the perfect counterbalance to severe inflation because of the way that it's structured. And because we haven't had severe inflation in the US at least, I'm speaking in dollar terms here, not in, let's say, Turkish lira or Venezuela, where if you look at it that way, it's done phenomenally well for that use case. But in US dollar terms, not as much despite its good performance. If we ever have the opportunity to test that hypothesis, I think when you see it really shine, and then the savings concept that Matt was going into, I buy more as an actual preservation of wealth versus I'm just trying to make more dollars to buy my Ferrari or my third home or whatever, which is what I kind of see it as now.
I don't know if that's 100% fair. I mean, we were just talking about this, how you can't really go into a Starbucks and buy a cup of coffee with Bitcoin because, one, I don't want to spend it like Matt was referring to, and two, what Christine was referring to, that there's a tax consequence. So it's not good for small payments like that. But if you're doing larger transactions across jurisdictions, it's certainly a lot better than going through SWIFT or something like that. Or if you're a migrant worker and you're sending money home and going through Western Union because you save a lot of money. So I don't think that it's fair to say that the only use case for Bitcoin is to store value, because it does, like the points I was just pointing out, it does have other benefits just because it is decentralized. You're not going through financial intermediaries, so it's cheaper, it's faster.
Good. Well, let's go a little bit more into DeFi. Anything exciting that you guys have seen in the horizon aside from, let's say, technical achievement, which I think is unanimously respected by observers in the space? It's very impressive, some of the things you can do at this point with a pretty limited platform from a technical perspective with Solidity and Ethereum, which is where the bulk of this is happening. But again, I guess the question is, what are you seeing from a utilitarian perspective or from a utility perspective that's sort of promising in the DeFi space? I'm going to turn that to either anybody who wants to, but I think John, you might have some strong feelings on that. Do you?
I don't know if I have any strong feelings. I think it's still really early days with DeFi. Bitcoin's been around for 11 years. It's matured a lot, and you're kind of seeing all of that technology and backbone and the macro story coming together right now at the moment. With DeFi, I'm not quite sure I see it that way. MakerDAO has been around for 2 years, and I think that's the biggest as far as how much ETH is locked up into it. Full transparency, we speculate in the tokens and the governance tokens, and we've done some yield farming. It's the people that are working in the space are trying to democratize finance, and they're doing good things. But it's still early days, I think. But it is promising, that the technology. If the U.S. government allows them to continue to work, but I see some promise there.
So not a DeFi expert by any stretch of the imagination. I do think it's exciting to see these proof of concepts kind of play out in real time. if I have a concern, the concern is around the overall governance and transparency. While they're transparent, I do think that many of these projects are fairly closely held. And I do think that can contribute to the relative instability or potential for challenging behaviors, which are not necessarily kind of an institutional construct. And I do think, look, I do think we are in the very early days, but there's clearly something there. So I think it's something to build on.
And I think there's just other risks in DeFi that have been, a lot of that has gone away with Bitcoin, since you can go to Fidelity right now and custody there in a safe way with insurance backing it up. With DeFi, it's not quite there yet. Like I said, we use family balance sheets to speculate in some of this stuff, and we yield farm, and we lock up ETH into these smart contracts, but then you're taking on different risks. You're taking on smart contract risk, which I guess technically you can take on risk from a bank, but there's FDIC insurance backing it. But essentially, it's transactions, it's lending, it's custody. That's not done by banks or any financial institution. It's done by software. And there's been issues in the past with like the DAO hacking back in 2017, when I think it's $50 million worth of ETH was stolen. So you're just taking on different risks that investors kind of need to get their hands around. There's other promising projects in the DeFi space, like decentralized insurance on smart contracts. They're still building. It's we're monitoring it, and it's not quite there yet. But like I said, it's early days. Maybe a year, 2 years from now, we do have good insurance contracts that are decentralized that cover you when you're locking up your hard-earned money into a smart contract.
Yeah, I think we're pretty much on the same page, in the sense that it has, again, a lot to prove, as the space generally does, but very fascinating green shoots in terms of potential. One thing that we've kind of avoided talking about so far, unintentionally, I'm sure, that's also probably a difference from 2017, since we started the conversation contrasting it to then, is the pretty vastly different regulatory outlook. Whereas in 2017, it seemed like an abstract boogeyman. Here today, as I'm looking at it, especially in the US, it seems to be on our doorstep. How do you guys view recent rumors around what that regulation is going to evolve into, with things like requiring KYC around transactions to and from wallets that you're sending to or receiving from? How does that impact the space? How are you guys worried about that at all? Or is it potentially a good thing?
I think that we have Zuckerberg to thank for this. I think it's, he's kind of the evil guy in the room, and now he wants to get into blockchain and start a stable coin through the Libra network, and I think they just rebranded it Diem. But some of the stuff we've seen the last 2 weeks is not good on the surface. Mnuchin came out, I think it was a week ago. I haven't heard anything since then. And then the stablecoin bill was floated around. I think, the people I've talked to, is dead in the water. But it is scary that the government's kind of waking up and looking at DeFi and stablecoins in particular. The whole KYC issue of, if you're sending money from Coinbase to a self-custody wallet, you'd have to KYC that custody wallet. I just don't think it's possible, and it kind of ruins the whole DeFi narrative and the ecosystem that people are building. It's supposed to democratize finance, and you should be able to move your money freely, around the world. So it's, some scary headlines, but I think that, I think some of this stuff is dead in the water.
Yeah, so I think we've made a fair amount of progress with respect to, collaborating with regulators and really having a voice and having some good outcomes. In terms of, just look at the no action letter from Wyoming and the impact that it had on the SEC. The SEC is now embarking on a period of consultation around the custody rule, which is one of the central points in terms of of institutional kind of friction. You know, I look at the OCC's statements around banks holding digital assets as being really pivotal to kind of the growth in the space. So what we're looking at, though, is we made some progress. We are, you know, we're going to have an administration change, and what happens in, you know, in an administration change, so there's an opportunity for us to kind of weigh in as participants and stakeholders in this ecosystem to help shape and educate some of the folks that will be coming into those seats to help build out this ecosystem. So it's truly an opportunity. And yes, there are some scary headlines. We're in kind of, you know, asset prices have risen clearly. Every time you see some of those kind of scarier headlines, which potentially could mean like banning of self-custody or a reduction of things like self-custody, or challenging to some of the central premises of distributed ledger technology and Bitcoin itself. Yeah, that's scary. That being said, we are embarking on kind of a new environment where we will have an institutional digital asset environment, and we will still have that kind of cyberpunk culture that fed and brought Bitcoin to where it is now. I think they will coexist. I do think we'll have to manage that. So I think it's up to us to really articulate the key pieces of friction that are helping us, that are preventing us from expanding. So honestly, I'm looking forward to this next period.
I'm definitely, I think you two both reflect where I'm torn here. On the one with John, I totally agree with you in the sense that it challenges the very core value proposition and ethos. On the other hand, if we go back to I would call it mild criticism, where the real use case here is still speculation. In that sense, this is arguably potentially a good thing, in that while the quote unquote utility, which is questionable whether it exists outside of speculation or not, may be somewhat neutered, certainly the narrative of that future utility is, I think, somewhat neutered. If the side effect is that it makes institutions more comfortable throwing a lot of cash in it and the asset prices go up, regardless of that lack of utility, I think, I hate to say this, but I will certainly be happy nonetheless. Maybe I'm a small man, but I think many others in the space who are pretending to be philosophical about it will be likewise happy to see their portfolios multiply.
Yeah, George, my true view on Bitcoin right now is that it's a bet, it's a speculative bet on Bitcoin being an inflation hedge in the future. I mean, I don't think there's any coincidence that Bitcoin's at all-time highs and so are stocks. You know, going back to when Bitcoin started, we've had 5 or 6 big drawdowns in the S&P. When that happens, Bitcoin's correlation goes to 1 to stocks. But I think that it's still early days, so that's why I think that the asymmetry in buying it right now is a good one.
Yeah,
awesome. Here, guys, I'm going to jump in. I don't think you guys noticed the question panel, so we've got a couple questions. We've got about 3 minutes, so let's go fast here. So what do you think of the argument that central banks will eventually step in and make use of Bitcoin, et cetera, illegal to allow their own digital currency, a la FedCoin, to take hold?
I think that's highly unlikely to be
highly unlikely. I do think you will see central bank digital currencies alongside other cryptocurrencies, but that's my belief. But I don't think Bitcoin will be illegal.
Yeah, I think it's highly unlikely. I think it runs into kind of the encryption ban issues that you had in the 90s, where, you know, to what extent is holding a Bitcoin private keys just software? Is it free, protected free speech? I think that when you look at Bitcoin's, you just mentioned earlier that, Bitcoin has been, from a price point of view, it has not been a safe haven asset, right? It's been very correlated. It's been very strongly and negatively correlated to safe haven assets. So it hasn't really been a safe haven asset from a price or volatility point of view. I think Bitcoin is designed to be fundamentally Nick Szabo, one of the pioneers in the space, coined the term deep versus shallow safety, right? Shallow safety would be price and volatility. Deep safety is, the ability to withstand, be in legally volatile districts, or to, be censorship or seizure resistant. I think that Bitcoin is uniquely suited for something like that. And I think, that's kind of when the theoretical value out of Bitcoin, where that rubber would hit the road. And I think, it's, it'll be an interesting period if that happens.
I think I know who asked this question, but I think
It's
it's
an anonymous attendee.
I know who it is. I think it's too late. It's too late. The cat's out of the bag. We've reached escape velocity, whatever you want to call it. And there's too much tax dollars for the government to make off this in the future.